Hey, Joe. So, really quick, I'm just going to go over market structure and kind of how to do top down analysis. This is not about levels, this is more just about price action in the moment and kind of watching to see what happens in the confirmations, right? So, we spoke a little bit about this previously this morning, but just to go over it again, 15-minute candles, really, you're waiting for that break above or break below, right? Especially when we're doing this chop range stuff. And so, the first circle entry, if you will, whatever you want to call it, the first reference point that we're going to talk about is this break of structure here right around 10 a.m. when we had the break down. So the way that I'm doing this is I'm drawing these circles and these notes on the 15-minute. Then we're going to look at them on the 5-minute, and then we're going to look at them on the 2-minute. So this first one again would be this break of the previous structure. So you would go short really when you break above or below the previous 15-minute. In this case, you're breaking below. So this first circle here is why that's drawn. The second one, when you're reversing after this 15-minute candle did not go any lower and did not go really, it did not continue, right? And so we're looking for that reversal, especially because the wick was higher than the previous 15-minute candle. But you don't want to get chopped up, right? You don't want to get caught in this entire range of this entire candle. So if you're waiting for it to go higher, you're realistically going to wait for this break somewhere in this range right here above this entire candle's wick, which would be the signal to go long here, which is what this circle that is kind of hiding is. That's what this one is drawn. Third one, up here, again, where we continue going up, we don't go up any higher. We can start to reverse. This 15-minute candle comes down much below completely the previous one before it, hence this reference point. And then the fourth one is this continuation here, right? After we kind of had this hesitation here, and we then continue further down. This is what they look like in the 15-minute. I want you to try to visualize a world where you trade by looking at this first and not the 5-minute and not the 2-minute. Your 15-minute is your guiding light, right? Here's another one that I could draw right now. So when you're looking at it from the 15-minute, you're focused on one thing, the market structure itself. So these structure shifts, these reversals, these continuations, whatever you want to call them, they are here because the market is changing structure. So if you can look at it from this super high level and see these huge candles changing, which is a lot easier than getting over analyzed in the 2-minute, you can look and see something like this. And when you drill it down to the 5-minute, you can see kind of where these circles land, right? So there's a little more noise, but you can see that they're just as relevant and just as accurate as previously on the 15-minute. The first one being right here, this break of structure down. The second one being this break of structure back up, which unfortunately would have gotten stopped out, but we're not talking about that. This third one, this break of structure back here, going back down in the reversal. This fourth one, this continuation. And this fifth one that you literally just watched me draw, this move back upwards. This is the power hour push at the end of the day. So you can see that they're relatively clear, right? And there's so much less noise by doing it on the 15-minute versus the 5 or the 2. But we're not trading on the 15-minute. Realistically, you're going to trade on the 2 or the 5. So this is what the 5 would look like. The 2, realistically, when you pull it up, it's a very similar story, right? You have a very clean break of structure here, a very clean break of structure here, a very clean reversal here, and a very clean continuation here, and a very clean reversal here. What you do have is significantly more noise, right? Significantly. Like, look at the size of these candles, the size of these wicks, and you could easily overanalyze. You could easily get yourself into trouble, right? By just thinking, oh man, I don't know, there's too much going on. But if you trust the overall market structure from the higher level, and then when you drill down what the indicator looks like and kind of where the trigger line lands, and I did not plan this, by the way. Once you see where the trigger line lands, you can see, using the indicator, how to best take advantage of these things. Again, huge rejection here, right underneath the trigger line, everything is red. Huge break of structure back up, right at the trigger line. Break of structure reversal back down, right at the trigger line. Break of structure continuation down, right underneath the microtrend line. Break of structure back up, trigger line. I don't need to be repetitive, but that's kind of how this works, right? So if you can get into the habit of looking at it from the 15 first, then use the 5 to confirm the structure, then use the 2 for your actual entry, you'll be in a much better place. Hope this helps.